Hello. Okay. Greetings to fellow traders. Firstly, I would like to thank you for coming into this room again of this topic, taking full advantage of precise trading zones. I welcome you back. For those of you who are coming first time, okay, what I would suggest is probably you may want to try the system, on a demo account for you to see, for yourself how effective is the system, right? And just a quick note, do take note of the risk disclosure. Okay, this is going to be purely education, and whatever we are going to discuss, this is, you may want to try it out on a demo account to see for yourself how convincing or how effective is the system can be. I'm sure, being a day trader, how many of you in this room are day traders? For those of you who are day traders, okay, what I would suggest is this is one of the system which is so easy to use, especially if you are able to learn the system and use it, right? And also do take note that we focus all in all about 36 crosses. Okay, we focus on euro, pound, dollar yen, dollar Swiss, Aussie, dollar CAD, New Zealand, and Sing dollars, and we generate reports and we generate support to all these 36 crosses. And basically, how we are able to do it, or how we do it, is, of course, we use the theory called price level principle, okay, or PLP in short. Basically, this is a system which we have developed. Okay, this is over the years. In fact, we have been working on this system for the last, I would say, aggressively for the last about 8 to 10 years. But the system was developed more than about, I would say, about more than 12 to 15 years, right? And basically, it uses Fibonacci, Andrews Fishball, moving averages, trend channels, Elliott wave, Gann numbers. And how is derived is later on I'll be showing you one examples how the zones or levels that's been derived, and how we can use the levels or zones to trade with ease, especially without emotions. And you must also understand or accept the fact that this is a probability. This is a game that's played whereby when we have better opportunities, you look for opportunities to trade. And in fact, our system is one of the best system. You can see it. To help you to choose, which is the best cross that can be traded at this moment, and how we can trade with ease, especially our entry, exit, stop losses. Okay, in fact, being a trader, this is the problem which I've come across over the years to see, how we can trade, especially, taking a decisions can be very difficult, especially, even sometimes, booking a profit also can be difficult. So on that aspect, how I use the system to help me to decide where I want to book the profit, where I want to put my stop loss, and where you want to take an entry, especially, entry is because, especially being a day trader, we have to be very precise on our entry, and that's how the system was developed, taking all these factors into consideration, and over the years, it was fine-tuned to see, and what I'm going to do is I'll show you one example, as always used to do it for the benefit of those people who are coming new. By the way, how many of you in this room are coming first time? For those of you who are coming first time, okay, probably let me know. Otherwise, I can just quickly, go and look for some live examples to look at the market. So we have some, person who are coming first time. Probably you can. Let me change the screen. Probably you have a look at the thing, because sometimes, just give me 1 minute. It may look complex, right? But in actual fact, when you learn how to use it, it's very easy to use, right? Okay, before we we go in to take a trade, okay, the reason why I'm doing this is because, being a day trader, I think, we have to have a proper way, a proper method of looking at the market. So, we must discipline ourselves, especially being a day trader, because the reason being is, we should be, especially, when we take a trade, we should determine before entry is triggered, to ask ourselves whether is it worth taking the trade, or, can we stay sideline, or so there's number of questions which arises in our minds to give us all the answers, to the questions that arises in our minds. That's where, we have to have a proper way of looking at the market. Looking at this today, this is something, which I always keep telling our clients to take note. Just look at what are the important data announcements, so that, we do not want to get ourselves caught, or do not want to get stopped out whenever there is some announcement that's happening. All right. In fact, tonight, we have a Cyprus Parliament vote. This is very important, which may start to move. In fact, this weekend, there was a news out from the Cyprus that caused the market to have a gap down on most of the markets, and in fact, I think some of the markets, the gaps are not still filled yet. All right. So, especially this kind of news-driven market, you must accept the fact, or you must take into consideration that is a fundamental that's driving the market. So as a result, you might get a lot of spikes or whipsaws, that causes, especially when the announcement happens, right? So other than that, there is no other important, all the other important data that is out, right? So after looking at this, what we normally do, or what our clients normally do, is look at wait for an alert. Okay, this is where the reason why we are doing it is because when we look at the alerts, that's telling us, it's just an alarm, that's telling us to tell us that the market is moving. Okay, do something. All right, and it doesn't tell us whether to be a buyer or seller. All right, and what we should do is after an alert is triggered, the most is it takes about 5 to 10 minutes, I would say, the most about 5 to 10 minutes to see or to decide, where is our entry going to be, where is our stop loss going to be in the event, if our trade goes on the wrong directions, and where are we going to book our profit. Sometimes we can book our profit partially, because if we feel that we are not very comfortable, you must understand and accept the fact that trading is all about confidence, and the more confidence you have, and the more discipline, and the more systematic you do, this is what helps you to be a successful trader in the long run. Right? Okay, now we have most of the alerts are triggered or crosses. Okay, is there anyone in this room trade crosses? Okay, now we have Aussie, Aussie, which has got an trigger, says that it broke the support zone 1 at 103.70, right? So when the alert is triggered, when it says that it broke the support zone 1, basically it's telling us the market is moving down, but it doesn't tell us whether it's going to continue in that direction, or is going to have a pullback or a reverse around that level. Basically this is an opportunity for us to trade. After we look at this, okay, the next thing what we need to see is we need to consult the strongest and weakest barometer, right? This is the tool that I use in taking my decision to see whether that alert supports the statement. Okay, when we look at this, of course it says 7 and 8, which means 7 and 8 is being the weakest. So basically it's telling us that Aussie dollar is weak, or Aussie is weak against the dollar, right? But the good and bad about this tool is, it doesn't help me to decide on the trade again, but it just gives me the confidence in my trade. That means, like after looking at this, when I consult this tool, the strongest and weakest barometer, it gives me additional confidence, right, in my decision taken. And of course, onto our right, okay, it tells us which would be the best cross to trade during this time. Of course, we have like pound Aussie, which has been the best cross, followed by Aussie Swiss, followed by Aussie Sing, and followed by Aussie US, right? So Aussie US is being the fourth, and when we look at the dollar strength, is also showing 3 and 2. So basically, it's telling us that the dollar strength is what that is causing the Aussie dollar to move. Okay. Now, after looking at this, the next thing, the next tool we need to use to see is to look at the report. So we look at the report, then we decide, whether to be a buyer or whether to be a seller, or whether to be stay sideline. All these answers would be given from looking at the report. So when we look at the report, okay, we have the report updated, twice a day, one for during the Asian session and one for the US session, right? So let me show you. Yeah, okay, we look at the US session report. So just bear with me, because the system is a bit slow. Yeah. Okay, we look at the US session report. Okay, our entry or the decision for our entry would always depend on, on the zones or levels, So basically, what we do is we look at the zone levels, then our entry, exit, stop loss is all determined. Okay, because being a day trader, I think this is the most tricky questions that need to be answered before we take an entry. And of course, we should get ourselves protected at all times, especially being a day trader, because sometimes we do not want to lose our capital, right? So looking at this, what I want you to do is just quickly write down all these numbers or levels which I'm going to share with you. Then I'll tell you, how quick it can be to decide on whether to be a buyer or seller, where, when, and so on and so forth. Okay, looking at the weekly open. Okay, this is basically early on I said, the price level principle. Basically, our rule of the game is, we feel whenever, we are working on probabilities. Okay, we are working on probabilities, and we are working on very high probability of winning. Especially if you pay attention to all these levels, and if you pay attention to all the zones, then it can be the least risk with the most rewarding, right? So looking at the weekly open, it says weekly open is 103.65, and right now it's trading at 103.73. That means it's trading near the open. Okay, and we have a month open which is 102.15, which is quite far away, right? Then we have an hourly trend, okay, which is sideways while 102.40 holds. So basically, it's telling us the market is caught in a range, or it's going to be a choppy session, because the word sideways tells me to decide whether it is advisable to hold, or whether I have to be nimble, or whether I have to whichever trader I belong to, whether I call myself a conservative trader or whether I call myself an aggressive trader, would this help me to decide all these words and these levels, right? So I want you to take down 103.65 is the weekly open. The hourly trend is 102.40. Basically, it's sideways but pointing up, which the green color denotes that. and the daily is also sideways while 10185. That means both the time frame, both the hourly and the daily are telling us the market is caught in a range, so we have to be nimble. And the weekly is also sideways, right? It says 10600. That means the weekly is pointing down, the daily and the hourly is pointing up, but it's caught in a range, so we have to be careful, right? So these are the analysis, that are derived by basically looking at all this set of numbers, levels. Okay, next, quickly, run through this. We have a critical resistance, which is where we expect the market to struggle or make a reverse. The previous month high was 106.05. Current month high is 104.60. Current week high is 104.15. So current week high, which is 104.15, right? And the current week low is 104. Sorry, current week high, current month high and current week high is about 5 pips away, right? So in fact, what happened was, that means this tells me that the current week high, which happened this week, the current month high happened last week. Current week high, which is 5 pips, fell short of last week high, right? And the current week low is 103.35. Current month low is 101.15, right? So basically, what I'm trying to do is, I'm trying to register myself all those figures or levels that are closer to the price. Then that's where I derive my entry, exit, and stop loss, right? So we have a current week low, which is 103.35. Right now the market is trading at 70.75, which is about 40 pips away from the current week low. So quickly, the previous week high is 104.15. Previous day high is 104.10. See, in fact, the high for the week, it happened yesterday. All right. So, and the low for the week, it also happened yesterday. So now the high and low happened yesterday. So today we know that this is caught in a range. So we have to be very nimble on this trade, right? So now our entry. Okay, this is what that determines our success of the trade. Our entry is always determined or derived at the zone 1 and zone 2 levels. So basically, we look to buy near at this level near 103.35 or 103.15, the support zone 1 and support zone 2. If we are going to go for a buy, that would be the least risk. If I'm going to go for a buy, right? If I'm going to go for a sell, then the least risk of entry is selling near 103.95 or 104.15. So all our entry, like as I said, would depend on zone 1 and zone 2 levels, right? If I'm going to be a buyer, if I'm going to buy at the value, then I look to buy near the support zone 1, support zone 2. If I'm going to go for a sell, then I would go for a near the high, which is 103.95 or 104.15, right? This is two types. Maybe I'll tell you, for the buys entry first. Basically, the lowest point of buying is near this support 1 and support zone 2. The next is we would buy somewhere in between. We call it a no man's zone area. That would be the second less risk entry. And of course, the most riskiest entry is buy on the breakout. If I'm going to go for a buy, that means the second time break of the resistance zone 2, which is 104.15, right? So now, basically what I do is I'll write down and capture all these levels. I'll draw it on the chart. Then I'll determine to see whether to be a buyer or seller. Then once I decide whether to be a buyer or seller, then my entry, exit, stop loss is all derived within these levels. And do take note that we use a variance of between 3 to 5 pips as a variance, because most of the time the market turns precisely at the levels So sometimes, like if you get stopped out, like you just get stopped out and the market may reverse, or sometimes if you want to book your profit, you may just miss the exit point because the market just reversed precisely at the level, So we have to have some variance. So that's what we practice doing. We put a variance of between 3 to 5 pips to prevent that happening, right? So now, 103.35, 103.15. These are my two entry points, okay? And we need to find our opening price for the day, which is not mentioned here. So the opening price is 104.03. Okay, so we have one more level, which is 104.05. That is another level for entry. And of course, we have 103.95, 104.15. These are another level of entry, right? So these are the 5 levels for entry. Later on, not to worry. I'm going to show you how it's done. Where is the entry, exit, stop loss is going to be, right? Then my price target is, if I'm entering a buy near this level, then I would plan to exit before 104.10 or 103.95, which is the zone 1 level. This is my exit price. If I'm entering somewhere near this level, then my stop loss would be below zone 3, which is 102.80, right? So I hope I'm clear. If you feel like I'm going too fast, let me know, I can repeat. So if I'm going to go for a buy, okay, I repeat, I would want to buy near 103.35, 103.15. That would be the least risk. My stop would be below 102.85, and my price target would be below 103.95, which is probably, 103.90, if I'm going to go for a buy. If I'm going to go for a sell, then probably I would want to go a sell near this level. My stop would be above 104.45 level, and my price target would be below or before 103.35 or even 103.50 level. This is where I plan to book my profit. This strategy is is one of the strategy which we teach our clients. Basically that's the least risk with the most rewarding entry, exit, stop loss, right? Of course, I'll show you, if let's say, because the reason why I'm doing this, the least risk, is because you must understand the reason is because the market is sideways, so we have to be very nimble. So this would be the least risk with the most rewarding opportunity, right? Now, my question is whether to be a buyer or seller. Now, let's look at the chart. Then that's where we decide whether to be a buyer or seller. Okay, looking at the chart, basically what we need to do or what we need to identify on the chart is, before we decide to go for a buy or sell, is identify the previous swing lows and highs, or the previous peak or valley. If I'm going to do a lower time frame, let's say I'm looking at a day chart, day trading, for example, probably we may want to use a 15-minute chart to help us to determine whether to be a buyer or seller. All right. So now the market opened somewhere near 104.03. Okay, this is where the market opened. By rule of thumb, what we apply or what we try to do or what our clients try to do is always try to stick in the direction of the opening price. Okay, basically what it meant is, meaning if the price is trading below the open, try to go for a short. If the price is trading above the open, go for a buy. The words are so simple, but in actual fact, when you put into practice, it's very difficult. But of course, we need to have a few checks to see, to fulfill that statement of selling below the open or buying above the open. The next factor which we take into consideration is, after looking at the opening price, look at the high and low for the day or for the session, and that helps me to determine whether the market is moving on which direction, whether it's going to go down for today or whether it's going to go up. Looking at this, we have the high which is registered at 10407, which is almost close or near the open, right? So, and we have the low which is 10361, okay, which is below the open. So basically the high and low would tell me, or would give me a clue whether should I be a buyer or should I be a seller. When I compare all these three levels, opening, high and low. See, remember, we are working on probability, right? Probability game. So we should look for opportunities whereby the least risk with the most rewarding opportunities is obtained. So if I know the market is trading below and when the high is registered, the next check I would want to do, or I want to do, is to see or validate whether that high is going to be a genuine high or it's going to be a false high. So how do I know that? When I compare with today's high with yesterday's high, right, then I would more or less would be able to determine, based on yesterday's high and yesterday's closing, right? When I compare these two, then I should be able to come to a conclusion whether the registered high is going to be a genuine high or a false high. I hope you are with me. Is there anyone lost? So what I'm trying to do is, I'm trying to look at the market to see which side I want to be in the market, so that I would want to take at the least risk with the most rewarding. So yesterday, in fact today, this was the opening price, right? The market opened today, and yesterday close was here. In fact, today's high happened somewhere here. Let me put a notation, okay, so at least you can see. Okay, this was today's open, this was today's high, okay. In fact, this was today's low, alright. So this was yesterday's close. So when I compare all these three figures, yesterday's close, today's high, today's low, right, by then I should be able to come to a conclusion whether the registered high or registered low is going to be a genuine high or low for the day. I hope you are with me, right? So looking at this, the market opened here, it went down first, right? Then it went up, then it came down. In fact, this is where the trigger level, for an entry, because the market opened, went down and went up, it made a high lower than yesterday's high and the previous day high. The market is making lower highs, right? So once the market breaks this low, this is where the trigger point is. This is where I would want to go for a short. Remember, earlier on I showed you the levels, and I showed you, the types of entries. One is, in fact, below or near the 103.35 or 103.15 level, and the other entry is within 103.35 and 103.95 level, and the next entry is, of course, above, if I'm going to go for a short, which is near 103.95 and 104.15 level. So when I look at this is where the trigger point, and I would want to go short near this level, which is 103.85. Once it breaks, this is where I want to go for a short, because the market made a registered high after the open. Two conditions are met. The market is trading below the open and it made a registered high. So I would want to go for a short near this level, and I would want to put my stop above this level. That means if I'm wrong, that means this is where I get out, and the price target would be where my support zone 2 level is, 103.35 or even lower, right? So this is what I would want to do on this trade. Looking at today's move, the market is right now has not reached the low yet, and in fact this low is also somewhere the previous, I think in fact last week's Friday's low, right? Is it Friday's low? No, sorry, Monday's low. So Monday, because there was a gap open. Yeah, Monday's low, right? So, having this, so I would want to exit before this level. But of course, again, it all depends on what kind of trader I belong to. Whether am I a conservative trader or aggressive trader. If I'm a conservative trader, then what I would want to do is I would want to book my profit at 103.50 level, before 50 level. Remember, there was one level which I was mentioning, early on. Let me show you that. The 103.50 level was our Europe support zone 2. In fact, if you look at more clearly, it would be Europe support zone 1. Okay, let me show you that report. Then you would more clearly understand where I would want to exit. Okay. In fact, if I look at this report, right? Remember, this is a morning report. So, of course, my safest entry would be, above 103.70, 75 level, and of course 103.50 would be my next level for my to exit. But again, you can ask yourself, because the market is caught in a range, and the market is being very very quiet and very choppy. So you can ask yourself, whether that's the risk versus reward, does it justify? Because if I'm going to take my entry at 103.85, then if I'm planning to exit before this, the most is I make about 10 to 15 pips, And of course, if I'm planning to exit at 103.50, then probably I make a risk reward of about 1:1. So the biggest advantage of this way of looking at the market is, when I look at it, I would know my answer. I'm very confident, before I decide to take an entry. Then I would ask myself, whether I would want to take an entry or whether I want to stay sidelined and watch the market, or I can look for better entries. So this is how we take our trade entries day to day. And of course, the market is being quiet. We know, because when we look at this market, if the risk versus reward, doesn't justify, then probably I would want to stay sidelined and just watch the market. So now, if let's say I would want to trade now, okay, let's say morning I missed it, So what I would want to do, or how I would want to trade this cross is, okay, what I would want to do is, see, we have an entry point at 103.95. Okay, this is where I would want to go for a short. Right now the market is having a pullback. So what I would want to do is, I would want to short at 103.95. That means another 10 pips away. then put my stop above 10415. That means about 25 to 30 pips stop, right? Then I would want the plan to exit at 10360 or 10350. You know, let me give you a trade setup based on this. You know, let me change the thing so at least you know you can clearly see. Aussie is, you know, is a limit sell. If I'll get 103.90. My stop would be, you know, this is going to be because a very tight stop, because the market is not, market is very quiet, you know. So I know it's, I got. Remember, you know, we must always trade the market. You know, when the market is so nice, take it. When the market is very you know, stubborn or not moving, then I think the best thing is we have to stay sideline and watch the market. So probably you may want to exit before even that level, you know, 55 or even 60. You know, this, I think 60 was the registered low, right? So I would want to do, and this is the trade I can look to take an entry this at this, and this is where I plan to exit. So the biggest advantage of our system is we look at the market and we trade the market, you know. So when the market is good, we take it. If the market is not good, then it's either we stay sideline or we watch for a better entry, right? The question is, what indicators do you use for strength? Okay, RSI. In fact, see, I use a lot of tools. In fact, I use RSI, I use moving averages, I use ADX. You know, in fact, all these three I use for strength. You know, looking at it. But of course, you know, it all depends. You know, how you use it, how you interpret it, and how you use the tool. You know, that's what makes you, because you see, it all depends on how well you communicate with the market. Right. So, I hope I have answered your question. The next question is, why the high, low closing price levels are important? Why not use simple support and resistance levels? Okay, like as I told you, you know, this is a system which we have developed over the years, and we have a very developed the system, and we have proven it, saying that the high, low closing, you know, all these are the key factors involved in the price decision of the next move. You know, so of course, you know, support and resistance, you know, it's so simple. You know, you can say, you know, buying at the support, selling at the resistance. But again, asking yourself, where is, you know, which is the best support, or which support is going to hold, you know, all this is a very difficult answer to find. And I mean, we can give a number of answers, but you must understand, trading is, you know, when we trade, we must only get one answer. You know, that means, you know, when we look at, before we take a trade, before we take an entry, we can get a number of answers. You know, then, you know, our confidence will not be there. But when we tone it down and we tone it down to see, you know, finally we only get one answer, that's where, you know, it becomes, trading will become easy, and that would be the most rewarding opportunity. The next question is our view on Euro US. See, in fact, Euro, I think, you know, is best for you to stay sideline, because, you know, the data is going to be out, and in fact, Euro is, we wouldn't know whether, because right now we must understand the fact that fundamental is what driving the news or driving the market. So we wouldn't know how is the announcement going to be. But technically, if you ask me, of course I can give you, but that again, it's going to be a bit risky, because, you know, the news is going to be out. You know, that's my saying on that. Okay, let me pull. Maybe I can show you. Okay, let me show you, instead of this, me looking at let me show you the dashboard, right? Okay, see, this dashboard is nothing, is but, it's just it's based on our report with live prices, the high and low. But of course, you should know that it gives us a number of answers, on our trading decisions. So looking at euro, okay, let me quickly run through, euro. What is my view? In fact, looking at yesterday's close, okay, in fact, market closed below the support zone 1, and it closed below, support zone 4, and closed below the open. So basically, the market is weak yesterday. In fact, because yesterday it was a gap down and it was weak. So my view is, as long as the bulls are not able to crack or break above 103.20 or 130.40, okay, I still expect the market to come down, right? So basically, any upside move is going to be limited, right? But again, to give us an answer, what is the how high can the market go, right? So looking at that, right now the market is trading at 129.50. So we have our resistance zone 1, which is 129.90, and zone 2 is 130.10, and we have an opening which is 129.55. So basically, if I see 129.90, 130.10, that's where I would want to go for a short, okay, irrespective if unless the news is really good, if it goes beyond that level, then I'm wrong on this trade. But otherwise, I would want to short. Remember early on I showed you 130.20, and my stop would be 130.45 and above. That's where I would want to put my stop. So anything near 130.40 would be an opportunity for the best. So I would want to short. If I see 130.10, probably I may want to go for a short, with about 30-35 pip stop. Then I would want to exit before the support zone 1 or support zone 2. So basically, when I look at the system, okay, within I would say, within 5 minutes, you should be able to decide your entry, exit, and stop loss. Of course, if you are very technically very well versed, then knowing this answer, doing your own analysis, that would additionally can complement your trading decisions, right? So this is the thing. But again, I'm still saying that try to stay away from euro because of the news, right? But if you get that level, then probably that would be the least risk with the most rewarding, right? Any other questions or any other crosses you want to discuss, or any other things? Before we forget, in fact, we are planning to do a webinar with FX Street next month, So I'm just letting you know, So it would be good if you can, because that's where we are planning to share our entire strategy and the entire system, So it would be good if you can come in, and also you can pull in your friends, to see, because that would be a real opportunity for you to look at. Go pull back to 156. Is it real? Okay, this is pound. If you look at pound, honestly, is right now what I feel is, is going to have a pullback, and we have a strong resistance near 152.30, 152.55 level, So the market has to crack that level. Then the next level would be about 153 something, and I don't think we should be able to see 156, in the near term, because we feel that we have one more leg down. In fact, we have a critical resistance at 152.65. So the market is going to find, difficult in cracking that level, 152.65 or even 153.20 level, So then after that, I think we may see one more leg down towards the down, to see. Then only, we can say, whether it's the bottom or. Until then, I think this is just a correction. So this is not a major reversal yet. Any other question? Okay, if you have no question, okay, once again, thank you for coming into this room. I hope it was a useful session to you. For those of you who are new, okay, what I would suggest is, probably, you may want to, because our system is very easy, especially if you're new, and it's very user friendly, to take your entry, exit, stop loss, and for those of you who have already been in the business for many years, what I would suggest is, probably you may want to try it out, because the system helps you to pick your entry, exit, and stop loss. Okay? And in fact, that is the most difficult questions to be answered, especially being a day trader. Of course, if you are a short-term trader or long-term trader, then your entry can be, of course, the only difference is your stop, whether it's going to be wide or near. But other than that, I think the system helps me to decide on all the things, and it solves me a lot of headaches and problem, being a day trader. Okay, once again, thank you very much, and I take this opportunity to thank FX Street for organizing this event, and looking forward to see you again next, maybe not next week, I think the following week. But in the meantime, if you need, probably you can come to our website, precisetrader.com for a free trial, and not to forget, please come to that April webinar which we are going to conduct, which can be an eye opener and for your trading. Right? Once again, thank you very much, and have a great weekend. Thank you. Bye.